All right now we are watching Wall Street as investors react to the Federal Reserve's decision to hold interest rates steady for the third straight meeting. The closing bell rang just moments ago, the Dow up 284 points. So let's take a look at our interactive stock market heat map. This is brought to you by FinViz. It shows the top 500 stocks. After a shaky day in the markets, a good number of these boxes actually landed in the green. Stocks wavered as the Fed Chair Jerome Powell warned tariffs could bring turbulence to the U.S. economy. Let's take a listen.
The tariff increases announced so far have been significantly larger than anticipated. All of these policies are still evolving, however, and their effects on the economy remain highly uncertain. As economic conditions evolve, we'll continue to determine the appropriate stance of monetary policy based on the incoming data, the outlook, and the balance of risks. If the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It is also possible that the inflationary effects could instead be more persistent.
CBS News MoneyWatch correspondent Kelly O'Grady joins us live from the New York Stock Exchange. Hi, Kelly. Help us give us some takeaways from Powell's comments. I know that you're so good at analyzing every single word and what it may mean.
Well, that's very kind praise coming from you, Jules. Look, I think the headline here is the Fed still feels that the economy is in a good spot, but they are between a rock and a hard place when it comes to predicting the future. I was counting, or rather I lost count on how many times Fed Chair Powell said uncertainty. So three major takeaways for you. The first is that Powell emphasized over and over the hard data still shows that the economy is in a good spot. Inflation has been cooling and the labor market still remains strong. Remember, those are the two mandates that the Fed has to look at. And in fact, my colleague Jolene Kent was in the room. She pressed Chair Powell on saying, okay, you say the economic data is there, but Main Street is really struggling and can't really wait and see the way that the Fed wants to. And he said, look, I'm looking at the data. I just don't know what is coming next. And that brings me to my next two takeaways. Stagflation. Okay, that means high inflation, slow growth, economic growth was kind of the unspoken theme of the day, because Powell said that there is increased risks of higher inflation and higher unemployment because of these tariffs. And that is part of what is driving this wait and see approach, because they need to see how all of this impacts that hard economic data. They don't want to make a preemptive move. He was very clear about that. And the final thing, Jules, I feel like this is a little bit flying under the radar, but it made my eyebrows go, whoa, when he said this. He said, in response to a question of, should we even get a rate cut at all this year if there's all this uncertainty? And he said, I'm paraphrasing here, it's uncertain. We don't really know how things are going to go. We don't want to make a preemptive move. I'm not really sure where we're going to go with this. So what I took away from that, the Fed did not share how many rate cuts they plan to make this year, is that we may not even get one, Jules. So that was sort of a big takeaway for me.
Yeah, absolutely. Definitely. Okay, so let's talk about the obvious. How are investors reacting?
Very choppy trading today, especially when that announcement came out. And I noticed when the point that I just made, when Fed Chair Powell was kind of iffy on the rate cut question, the Dow went like this. Investors immediately reacted to the fact that there may not be rate cuts. But overall, we still ended positive with all three major indexes because they liked hearing, hey, we're in an okay spot. The Fed still feels confident about where we are. I think where you saw sort of the most concern was in the NASDAQ. It's a very tech-heavy index. Tech companies want interest rate cuts because they want to be able to invest more cheaply in artificial intelligence. But still, we ended up, I would say, tepidly in the green today.
Okay, all right, but then let's focus on Google because its stock tumbled today. So what's going on there?
So Google, right? Big search engine. A lot of their money comes from that. Well, if you open your Safari browser on your iPhone, that is the default search engine that comes up, google.com. And today, in the antitrust trial that we've been following, A senior Apple executive said that they are considering not having the Google search engine be the default when you open up, because AI search engines, they think that is the future. That's why Google stock went down 7.5%. It closed down because that's a really big driver for them of all those people using it. Now, Apple didn't say this is for sure. They just said it's something that they're considering, Jules.
All right, good information. Thanks so much, Kelly O'Grady. Appreciate it.